Okay, what do you make of the market today? It was bullish yesterday, not quite so today.
Today we saw the market being dominated by financials. It's been quite typical of an earnings season. Whenever banks announce their half-year results, quarter, Q1, full-year results, they normally get normally investors try getting in anticipation of the results. We've seen it happening, but like now today we saw NIC bank announcing profit before tax going up by 54%. We guess that's the reason as to why banks have been dominating trading in the Nairobi Stock Exchange. And we saw also the rights issue shares from KCB coming into the market. And in fact, I mean, we'd expected supply to check in for the rights issue. That's why we saw today supply coming in for the KCB rights issue shares, and that's somehow depressed the share price. The share price dropped from levels of 1860 to like 1850. But we think this is short-lived because I mean the investors got in the rights at levels of 17 shillings. Mm-hmm. So we think that there could be some profit taking. I mean they're locking in gains, but we don't think KCB will drop below 18 bob. So the fact that the market today dropped by just 1 point, it didn't indicate anything. It's not like signaling a downward trend. We expect the market to keep going up. There will be some profit taking, but the general trend, I mean, it's up. I mean, there's a feel-good attitude in the market now that we ushered in a new constitution, and we expect this to affect the market through the year.
All right, you mentioned the new constitution, James. Let's just extrapolate on that a little bit. What we did see prior to the 4th of August was a lot of positive sentiment, equities rallying upwards in Kenya. But now what we're seeing, for instance, is the trading in bonds. In this week, we've seen about 600 million shillings worth of bonds traded, whereas in recent weeks, we've seen as much as 4 billion shillings traded. Some would have thought that with people more optimistic and upbeat about this, the future scenarios for the Kenyan economy, that government securities would look attractive. That's not the case. Why is that?
We think the reasons why there is subdued activity in the fixed income market is because of the current IFB infrastructure bond. It's quite a big issue. It's about 31.6 billion. We guess that's why focus has shifted from secondary trading to investors and traders trying to take positions in the IFB. It's closing on the 24th. We guess after the 24th, we may see some increased uptake in the fixed income market. And another reason as to why there may be subdued activity in the bond market is the fact that rates have been quite stable, and normally traders don't like rates being stable. An environment whereby there's volatility, that's when traders can easily make money. We guess that's the reason. Those are the two reasons majorly affecting the bond activity, but they're short-lived. We think after the 24th, we may see activity increasing the bond market.
All right, as you said earlier on, a market mover, KCB, the fact that they'd issued a rights issue a few weeks ago, which didn't quite meet the targets that they'd set themselves for 15 billion, one would have thought that investors would be a lot more cautious with the issuance of shares today. Has recent history had any impact on KCB?
We don't think the under subscription, I mean, we don't think it will affect the way the share price will perform, because the market had expected a subscription between 80 to 90%. So the fact that they were able to meet those expectations, the 82.5%, we think the market took that positively. And the reason as to why, like I said earlier, we may see some weakness in the share price is not anything to do with the fact that the rights was undersubscribed. It's because people got in the shares cheap. They got them at 17 shillings. Mm-hmm. Now, I mean, if they can be able to sell them at 1860, 1880, some investors may be willing to take up profits. Yeah, but going forward, we don't expect it to to continue with the downward trend. I mean, sooner than later we'll see it going up, and it may be by close of year we'll be able to do.
Let's
like
talk about other forces within the market. Yesterday we heard Zain Kenya announce a tariff reduction from 4.2 shillings to 2.2 shillings. How is this competition going to affect perceptions of the telecoms market and the attractiveness of Safaricom?
Zain Kenya, which was recently acquired by Airtel, we saw them coming into the market very aggressively, slashing their rates by almost 50%, and these rates apply across networks. But we think the fact that CCK has revised interconnectivity rates down from 4.21 to 2.21, I mean, it's sending a signal to all the market players that they need to revise their rates down. We think Safaricom being the target here will retaliate, and we think going forward we may see these price wars, but I mean it's the common good of consumers. Consumers are taking this positively. So at the moment, like when the news came through yesterday, we've seen Safaricom experiencing some weakness. I mean, yesterday to date, Safaricom has lost like 1%. I mean, going forward, we expect some caution around Safaricom, but we think they'll be able to come strong, and I mean, sooner than later, we may see them also following the same trend.